Hey there, Jim Brees here from GreenGrowth CPAs, and today we're going to talk about Opportunity Zone credits. From the 2017 Tax Cuts and Jobs Act, there was this new opportunity for real estate investments in ways to lower your tax burden. So we're going to talk about the actual credits and then how cannabis businesses can actually take advantage of these credits and mitigate any impact from 280E. So let's hop right into today's presentation. Hey there, Jim Brees here from GreenGrowth CPAs, and thank you for taking the time to check out our video about Opportunity Zone credits. So Opportunity Zones are some of the best investments available for anyone with the funds seeking to lower their tax responsibility. These are praised by some as the more socially conscious form of real estate investing because Opportunity Zones offer a way to do good while saving money on your taxes. So today we're going to dive into what you need to know about IRS designated Opportunity Zones. But before we do, I need to let you know that the information contained in this presentation is meant for guidance purposes only and not as professional legal or tax advice. And further, it does not give any personalized legal, tax, investment, or any business advice in general. So with that out of the way, let's review what the topics are that we'll cover today. So first, we're going to talk about what Opportunity Zones actually are, then discuss the benefits of Opportunity Zone credit investments, and then we'll go through some investment examples, and then discuss how 280E and Opportunity Zone credits can work with each other and how you can take advantage of these as a 280E business. So just a little background on what an Opportunity Zone actually is. So an Opportunity Zone is defined by the IRS as an economically distressed community where new investments under certain conditions may be eligible for preferential tax treatment. These areas have been nominated by the state and then certified by the U.S. Secretary of the Treasury. Opportunity Zones were created by the 2017 Tax Cuts and Jobs Act, and under this legislation, the zones are meant to increase economic development and job creation in areas that were, traditionally underserved. An area can qualify to be nominated as an Opportunity Zone by two ways. So the poverty rate has to be at least 20%, or the median family income is no greater than 80% of those of their surrounding areas. So currently there are 8,700 designated Opportunity Zones around the entire country. And once an area receives that classification, it will continue to be an Opportunity Zone for 10 years. So let's discuss some of the benefits to Opportunity Zone credits and what investors need to know about these Opportunity Zones. So the government created Opportunity Zones to incentivize investments in areas that need rehabilitation, they need jobs, and they need that cash injection to make them vital again. There are some great tax benefits to cannabis operators who bring their business to Opportunity Zones. And we'll discuss how this works a little bit later in the presentation, but let's go over some of the benefits here. So the IRS offers investors what they call qualified opportunity funds. And this option allows investors to put their existing assets with accumulated capital gains into a private fund. But there's a catch, okay? So at least 90% of the fund's capital must be invested into an Opportunity Zone. So in return for doing that, the IRS has decreed that qualified opportunity funds get the following tax benefits. So there's 4 of them. So first, investors can defer tax on prior gains invested into the Qualified Opportunity Fund until the date of which the fund is actually sold, or December 30th, 2026, whichever is earlier. Then secondly, if the Qualified Opportunity Fund investment is held for more than 5 years, then there's a 10% basis increase on the original investment, which means that will lower your tax burden on that original investment. And if you've held it for 7+ years, that 10% basis increase becomes 15%, which is the third benefit. And then if the Qualified Opportunity Fund investment is held for at least 10 years, then you, the investor, pays no capital gains from those investments that you made with the Qualified Opportunity Fund. That's an amazing benefit that who wouldn't want to have great capital gains and then not be taxed on it. And these are really great for investors that want to get into real estate. It's a very savvy way to get into the industry where you actually purchase a building and then lease it out to tenants, especially because there's cash flow built into that investment. So next, let's look over 2 Opportunity Zone investment examples. I'm going to go over just 2 strategies depending on if you've got investments already or if you're sitting on liquid cash. So in the first option, imagine that you just sold stock, you sold your business, or you sold a real estate property, right? And the result is, say, $1 million in capital that you get. So upon the sale of those assets, you would technically be taxed on whatever your capital gain is there. So instead, reinvest that money into real estate property located in an Opportunity Zone. So there's a few benefits. You'll benefit from the deferred taxation on that original gain. And secondly, if you hold that investment in the qualified opportunity fund for 5, 7, or 10 years, you can partially or completely avoid taxation. Plus, any gain on new appreciation in that property you purchase, you don't have to pay capital gains tax on that as well. Now, the second option is that imagine you're sitting on a pile of cash. Who wouldn't like to have that happen? But there are some people out there that are very liquid in cash heavy, and say you're looking to invest, okay? What we would suggest is that you look for an investment in an opportunity zone. And any gain due to appreciation of that property can be avoided by the rules we talked about, previously outlined in this video. So it's a win-win for you and your business, right? So the real estate appreciation on that qualified opportunity fund, you'll have no capital gains tax on that. So what you'll notice if you're in the cannabis industry, a lot of the places that are qualified as green zones, right, where cannabis businesses can actually operate, is usually on the fringe. It's usually in places that they don't want a lot of foot traffic, at least for like the micro businesses. Retail may be in these other areas that have higher foot traffic, but you'll see a significant portion of manufacturing, distribution, and cultivation is outside of these high traffic areas, which in many cases becomes one of those opportunity zone areas, right? There's a lot of poverty in these areas. There's a lot of low median income in those areas. But at any rate, these properties that can potentially be licensed are more than likely going to be opportunity zone areas. So it's very, very smart for you to think about, again, pulling your cash out from other investments and parlaying it into a qualified opportunity fund. So let's now discuss 280E and opportunity zone credits. As I said, where you think about, all right, these cannabis businesses are potentially or more than likely going to be in these opportunity zones. How do we make that work, and how do we benefit from this, as well as mitigate any 280E impact? So technically, any property in an opportunity zone is going to qualify for this opportunity zone credit. But 280E excludes any credits or deductions that are not cost of goods sold for cannabis businesses to take advantage of. So directly, a cannabis business cannot participate and get this opportunity zone credit. So what you should consider is that purchase the real estate in an opportunity zone, but then place that real estate in a legal entity that's separate from a 280E business, and then lease the property back to the 280E business. What this will allow you to do is take advantage of those opportunity zone credits and help mitigate any impact from 280E on your opportunity zone fund investment. So that's a little color and context to opportunity zone credits. If you want help with understanding how you as an investor or a cannabis company can take advantage of opportunity zone credit investments, please reach out to GreenGrowth CPAs by visiting greengrowthcpas.com or give us a call at 800-674-9050. We can walk you through the process of opportunity zone credit investments, as well as how to structure these investments so they don't become too impacted by 280E regulations, and you can take as much advantage of increasing your basis for those prior investments that you're parlaying into this qualified opportunity fund. Again, you can reach out to us at greengrowthcpas.com or give us a call at 800-674-9050. Thank you again. Hopefully this presentation has brought you some value and some understanding. Have a great day, and we'll talk to you soon.